Hi, welcome to Charts Chatter with Chatur Charts, the 25th May 2022 educational edition. Today's market was no surprise, and for reasons that we have already discussed in the past few sessions, Nifty again was choppy, and the evening star 2 sessions back completely wiped off the 400-point gain from Nifty and brought it back again to the 16,000 level. So today we aren't going to spend too much of time on Nifty or Bank Nifty because we know that it's going to be moving in a range. We'll just quickly spend half a minute to just understand what happened with Bank Nifty. Bank Nifty was relatively strong and as expected. But again, the extreme pressure of selling that was prevalent everywhere, it also had to buckle in. But it closed with an inverted hammer and with a few points of gain towards the end. So Bank Nifty still appears strong. So probably there is some sectoral kind of a rotation that's happening with metals buckling down because of the 15% export duty on steel. Steel stocks have kind of tumbled anywhere from 8 to 15% over the last couple of sessions. Nifty IT has fallen 30% from the year high in January of 2022. So naturally, this money has to go up into some sector. So my guess is that money is moving into perhaps financials, and financials have performed reasonably well. The quarterly results have come out kind of well. So looks like there is some sectoral shift that's happening. So time will tell, and the next few sessions are going to be crucial as to what RBI does with policy rates. So if that is something that meets market expectations, probably Bank Nifty will kind of move up as it appears. Today, Kotak Mahindra Bank hit a high of 1940. So the second target also has been met. All the private banks were strong as well, but they buckled under pressure towards the end. So now let's find out. Now we've been talking about the benchmark indices, that is Nifty and Bank Nifty. And ultimately, Nifty is composed of several sectors. So today, the focus will be to understand Nifty IT and what's happening with that sector. Everybody knows that the index has lost 30% from the top. So let's analyze the chart and see where that is headed. So here's the Nifty IT chart. And as you can see, I had to pull up a weekly chart because on the daily chart, there's so much of selling that has happened. So it makes sometimes analysis a little bit of difficult. But nevertheless, we'll start with the daily chart. So this was a head and shoulder pattern that was made way back in April, towards the end of April. The right shoulder got formed, and naturally on the day chart, if a head and shoulder appears, then probably a correction is bound to occur. The depth of this target, the depth of this correction, if we were to measure from this head to the neckline, was about 5,500 points of fall. So if this target is moved to the neckline, we get an eventual fall of 5,500 points, which coincides with about 27,290 thereabouts. With today's fall, index has actually closed at 27,566. So this fall more or less kind of coincides with the depth of the correction. So ideally, the index should take support here and move up. The reason why I feel it would kind of take some support here is because this was exactly the point from where the rally had started in May of 2021. So if you notice, from December of 2020 to May of 2021, the index had spent considerable time in a sideways fashion. So, and before the rally in IT stocks started. So now why is IT correcting is one fundamental question that comes up. IT is correcting because the extra money or the excess liquidity that had gone into IT stocks worldwide is now being pulled out. So with the US Fed loosening its purse strings and due to quantitative easing, a lot of IT stock valuations went up very, very sharply. And now with the Fed tightening, this money is being pulled out. So naturally, the sector that uh, gobbled up a lot of money is now giving it up. So that is to describe it in very simple terms. So in order to understand where Nifty IT sector is headed to, I did a reverse Fibonacci pattern to see as to what is the further downside that is possible in the sector. So as far as Nifty IT goes, if we were to take May 2021 as the start point of the rally, there's only about 200 odd points left for Nifty IT to completely give up the rally. And it is actually at a very, very critical juncture. So if Nifty IT breaks 26,135 or 26,150 thereabouts on the day charts, then Nifty IT sector will actually enter a bear market territory. And this bear market territory has the potential of taking it to the Fibonacci extension level of minus 1.272, which is way down at 22,500. So it is meaningless right now to look at daily averages because the entire averages have been thrown out of sync. The 200-day moving average is sitting right at the top, whereas it should have been at the bottom. And none of the averages are below the price. So at this point, averages are meaningless. It's only by way of a Fibonacci extension tool that we can try and see if there is any salvage that is possible. So if Nifty IT breaks 26,250 thereabouts, then it might enter the bear market territory for the sector. Now, this does not mean that Nifty will enter the bear market territory, because I see a sectoral shift happening and money moving out of the metal sector, IT sector into banking, financials, heavy engineering, industrials, and services sector. So, and the auto sector. So these sectors are seeing a lot of buying, and these sectors charts are doing quite well. So obviously it's not a complete Nifty correction. So probably a sectoral shift is what is happening. So if Nifty IT has to recover, it has to first recapture the level of 28,900, which was given away a few days ago. And thereafter, it has to recapture 31,000 levels. So only after these two levels are recaptured will Nifty IT perform. So now let's understand a couple of stocks in the sector to see how are they doing. So let's take the case of Infosys. Relative to the other stocks in the IT sector, in the Nifty IT sector, Infosys is one stock that is still relatively better than the others. The reason is using the same reverse Fibonacci tool extension, we see that Infosys is still in the 78% to in the 38% to 23% retracement zone, and it has still not kind of completely given up on that. So there is every possibility that Infosys might recapture its Fibonacci zone of 1458, and if that's done, it might quickly move out to the 1500 level zones. Interestingly, this was something that I pointed out even in a few sessions back. The stochastic is showing a reverse bullish divergence. The RSI is also, even with a steep sell-off that's happening over the last few days, it has not had any adverse impact on the RSI and on the stochastic. So these are kind of signs that the selling might end. And this was the impression that I also had a few weeks ago when I talked about a 168-point possible bullish reversal in Infosys, which was very short-lived. It went up by about 70, 80 points, but thereafter completely gave up that gain and sold it again. So even with that 100-point cut after that, this stock, the reverse bullish divergence still prevails. So Infosys might be amongst the first to recover if Nifty IT starts recovering. Let's look at a few more stocks of this very, very important index. TCS has been very, very badly hit, and TCS is also kind of mirroring whatever Nifty IT is mirroring. TCS has completely given up the rally because with the reverse Fibonacci extension tool, it is now entered the bear market zone of minus 1.272. So if TCS holds the 3100 level, then it has a probability of moving up. But if this level breaks, then it is sure shot going to retest lower levels of 3064 and then even maybe even 2900 if Nifty IT gets into bear territory. But again, one very interesting feature, you will see that I have drawn a lower low as far as the price movement is concerned. So the price from on 24th of February was 3,400 thereabouts. And today's close is about 3,167. So obviously the price has dropped. So I have joined these 2 points with a sloping line, which indicates a drop in price or a lower low made. But the stochastic for the same period from 24th of February to date has flattened out and in fact has kind of curved upwards. So which again is an indicator that probably the selling may come to an end, even in case of TCS. The RSI has also given a reverse bullish divergence. So this kind of a pattern is also seen in several other IT stocks. So does this mean that Nifty IT selling might come to an end? Probably yes. Now it's not mandatory that a reverse bullish divergence always have to play out, but the probability of such setups is quite high. So let's see as to what Nifty IT does. Again, just to sum up, Nifty IT has to kind of hold on to its level and of 26,000 of 29,800. And if that is broken on a conclusive basis, then it might spell a lot of trouble for the entire sector, and it might push it into bear territory. So let's see how Nifty IT performs going forward, and we will keep you updated with more information. I hope you do like this video, and if please press the like button, and please share this link amongst the trading community so that it can kind of help everybody. And if there are any other topics that you do want me to cover, please do let me know, and I'll be happily doing so. Thank you so much, and have a nice evening.